Okay, welcome everyone. We're about an hour and a half into the trading day here on Friday, December 11th. I'm just going to do a quick blitz and kind of run through all the different charts that I'm looking at this morning, just to give everyone kind of their bearings on the market. So if you're new to the channel, we go through stock market technical analysis. We look at trade ideas, try to spot where the market's going to go, and let's get right into it. All right, and hit that thumbs up if you're new. I do appreciate that. Triple Qs, we're kind of bouncing off this support level. It looks like it's about 320 or so. You can see this is just this little zone where it held resistance previously, and then it was support right back here. We're looking at an hourly chart here. I do expect it to break, but you know, again, it can hold for a little while. Eventually, I think it's going to break, and likely we head lower. Down to, you know, there's a level here at about 297, and then we've got another level that looks like it's about 293.65 or so. So again, if you're targeting those levels or looking at those levels, you want to step in a little bit early if you're looking to take profit at those levels. For me, I would be looking for at minimum this level, to this 293.65 area. That's triple Qs. I do think it continues. Again, we had the bearish rising wedge. We have the bearish divergences across the entire multiple time frames. You know, here's your daily bearish divergence right there. And if you go to the weekly, we've got it on the weekly. So multiple time frames have the bearish divergence, telling me that this sell-off that we just saw on earlier this week, is just the beginning, and we're just getting that kind of consolidation reaction before moving lower. SPY. So SPY's still hanging in there. I've been playing with this trend line a little bit. You know, we could mark it right here. I'm just going to leave it right there for the benefit of the doubt. And as of right now, I'm just going to say SPY's still holding support. And so I'd like to see that impulsive breakdown of SPY. That would help the case for the other indices. If we break down, there's a gap to fill right here at 362.40. I'd expect a reaction right there. But, you know, again, negative divergences across multiple time frames. Here's the SPY. This is a big negative divergence. It's been building for quite some time, telling me that we're likely to head lower here. TLT, so this is the long treasury bond, 20-plus year treasury bond, and it continues to work higher. And again, this is what I thought was going to happen, because see the bullish divergence right there on the RSI going into the PPO. You now have a bullish crossover. You got that yesterday actually, and so yeah, the bonds look like they're moving higher. Bonds up typically means stocks down. So continue to watch for that. Now, what I'm looking for on the TLT is probably a break above this 161.15 area. And a break above that would set this thing to the upside. I don't know how much upside is really, how much this is capable of doing, but I could easily see us getting back up to this 171.50 area. So possibly a small trade there. And from there, you know, it's 7% or so. Bonds don't move that much, so you know, with this one, I typically take a little bit larger of a position size. Gold's doing nothing today. It's just continuing to, you know, gyrate around below this downtrend line. So you can see here's your downtrend line. We're just doing nothing. I think gold's potentially going to head slightly lower. And then just undercut these lows right here around 1760, 1770, somewhere right around there. And then that would be a pretty good buying opportunity, I believe. Dollar, again, if I look at the dollar here on the hourly chart, it's moving higher, but if you roll out, it's really just kind of going sideways. So there's no definitive break or trend right now in the dollar, short term at least. Longer term, I mean, or intermediate term, yeah, it's down. You know, we have a downtrend clearly. But if you look at the dollar, we've had this bullish divergence now in the dollar right here. This is a bullish divergence telling me that the dollar's likely to, to make a move up. So that would also mean that stocks are likely to sell off. So that's what I'm seeing. I'm seeing a lot of signs that stocks are going to continue to sell off. Also, volatility. You can see UVXY has broken out now out of this bearish falling wedge. It's not super impulsive yet, so I could see us coming back and doing some back testing of this trend line. Maybe we tag it, again, sell off and hit it. But it is a breakout, so I'm looking to continue to build a long volatility position. This one, again, I don't take a huge position. I always take a much smaller position in volatility than I would something like triple Qs or just any individual stock. But this is starting to break out. It has bullish divergence. You can see here on the daily, it has bullish divergence on the daily and the hourly. Here's the bullish divergence on the daily. It's basically an equal indicator low and lower lows in price, and then it's there on the hourly as well. If I roll out here, you can see we're clearly diverging, bullish divergence. So telling me volatility is likely to go higher, and that's just another sign that tells me stocks are likely to sell off more. XLV, second largest sector in the S&P 500, healthcare. And you can see kind of selling off. Nothing impulsive yet. We've been dancing along this trend line for a while now. So I'm looking for some sort of clear sign or breakdown. We also have a gap down here. So, excuse me. If we're going to get a sell-off, we'll probably get a reaction around this gap right there. But yeah, I still think this heads lower. And you've got lots of gaps down here to fill. So if we fill that gap there and then get a reaction, then it breaks. Once it breaks that, you head down to the next level. I could mark this level out right here as well. This is kind of your gap entry. So you've got several levels along the way. Feel free to just mark those out, and that's what I'm watching. Ultimately, I think we head back down to 97. That's kind of my final target, at least for right now on this ETF. And from high to low, that's going to be a drop of about 13.5%. XLF is starting to turn bearish. You can see here we have this uptrend line right here. We broke it the other day, but it hasn't been impulsive yet, and it's just still kind of hanging in that zone. So I'm really looking for an impulsive breakdown, and maybe looking at some of these other bank stocks like JP Morgan and stuff to see if they're going to start to break down. I'm not seeing the weakness in JP Morgan yet, so I'm keeping an eye on it, but XLF's starting to look weak. XLE Energy, it's right up at resistance right here at about $42. You can see here, that's your previous, this is the island cluster, gap zone where we gapped up, created that island cluster reversal, and then gapped down. And we ran right up into there. So I could easily see us pop that a little bit. Maybe we just chop around up there, popping it, running stops. When you're this close, the algos will, sometimes run up and try to run some stops. And so we could do that, but I would expect we fail there. If we don't fail there and continue higher and, take out this cluster, then nothing but bullish. But as you can see on the hourly, starting to get that negative divergence. Well, it's intact right there. And then I think it's even there on the daily. It is, yeah. So you can see we have negative divergence showing up now on the hourly and the daily, telling me that this is kind of the end of the road. So I'd be looking for the potential of that stop rate pop, just popping up into this above this 42 area, and then the fail. And then where's it go? Well, probably back down to this 34 or 35. The FANGs, we'll skip the FANGs and we'll look at KHC, Kraft Heinz. All right, so on the daily chart here, bearish rising wedge starting to show up. Negative divergence here on the RSI. The PPO, we don't have it yet, and it hasn't made a bearish crossover yet, so maybe a little more work to do there. Going to the hourly here, you can see we're just kind of working our way up this wedge. So it's starting to show signs that it's going to break down. I would look at this trend line right there on this hourly chart for an impulsive break to be the sell signal. Where's this thing go if it breaks? Well, the thing is that I was always looking for this 25 area in KHC as kind of the low, and to make this potential head and shoulders pattern, reverse head and shoulders. You've got the right shoulder here, or sorry, the left shoulder, the head, and then the right shoulder. So I was looking for that. So I would still be looking for that, but I would say we would stop here at about 30.50, head down to 28.40, and then we'll see if we get that 25. PayPal here down a percent today, just kind of continues to really go sideways. You can see over the last few days we've just kind of gone sideways. Not going up anymore, but not breaking down yet. So, that's kind of normal price action sometimes before you break down, is you just kind of hang in an area for a little while, consolidate, and then break down. I still think it does break down because you've got the big negative divergences really extended on this, and ultimately, I believe we head lower, and I'm looking for this gap fill down here at 129.62 as kind of my ultimate target in this, which is a drop of about 40%. Nvidia, same thing. You can see it's just going sideways. Negative divergences are still intact. And so, this one, I'm looking for first level is we're probably going to hit this 476.85. We're not too far off of that right now. That would only be a drop of about another 7%. So likely to get a reaction there and then head down to 431.55. And from there, we'll have to see. I'm not sure how much further this one seems to like it wants to go. Semiconductors, SOXX, they're starting to break. So here's your hourly chart, and you can see I've got lines kind of all over the place on this one. But short term, here's your uptrend. And we did a back test, and we're starting to roll over. So look for that to continue. Look for that to be, get more impulsive as it breaks down. Where's it going? Well, I'm going to have to probably tighten it up, do a little more research on this one. Probably at least down to this 331.50 area. So I'll have to continue to look at that one. Carvana, this is just one of those momentum stocks. The momentum's fading, but price action hasn't shown it yet. So you can see here on the RSI, we have negative divergence. The PPO hasn't made the bearish crossover yet. You can see here it just came down and ricocheted off of it, just slightly bounced, and that got us another slightly, new high basically. But I think that's probably the end of the move. I'm looking for this thing to start to cross negative now and head lower. Bearish rising wedge. So I think it's going to do it. But as of right now, we're sitting up there against resistance. So it's objective to be to short here with negative divergence and at resistance. Doesn't mean it's going to work, but it is a low risk area. If it starts to pop up and rip higher, you can always cut your short and move on. Etsy daily chart, negative divergence right here. We made a slightly new higher high, so we have a divergent high. We have an uptrend line on the daily. We need a sell signal or a breakdown of that to trigger a sell signal. Until then, it's trending up. SQ, big negative divergence, still intact. Continues to just grind higher. Not a lot of momentum, just slow grinding action higher. You can see today it's pretty much flat. I am expecting this one to start to fade and break down here pretty soon as well. But again, they could pop it up above here, try to run some stops. It still, to me, looks like it's going to head lower. The market, the tech stocks in general look like they're going to go lower, so I would expect this one to go lower as well. Update on Peloton. I cut this one yesterday when it recovered, so I took a short right here. If I go to the hourly, I took the short right there when it started to break down, and when it started to come up and recover and then closed, had this hourly close above it, I covered. So that was a loss of about 1% loss. And, it was a false breakdown as of right now. So you can see here's your uptrend line, and they broke down but then recovered it, and it's still holding support. So I don't want to be involved. I don't want to be short this thing when it recovers support. I want to be short when it breaks support impulsively, and this one just ended up being a false breakdown. So moving on. This is interesting. Intel. starting to break lower. If we get a close down here, it looks to me like we're going to have a false breakout. I'll show you what this has bigger kind of longer term implications. This is, and we go to the weekly chart here. This is going back to 2009. Here's your bull market in Intel. It's held that channel the entire time. Lots of reactions around support, and you can see it recently broke down, and then they recovered it. So it broke down, a pretty impulsive breakdown too. I mean, that is a sell signal, and then it came back and recovered it and closed back above it. So if we get the breakdown again and it starts to, sell off, that might have been, kind of a false signal that it was going to pop back above and it's actually going to sell off. And this potentially means that Intel is starting a bear market, basically, and breaking its longer term trend support. Intel is down about 26% so far, so from the high. So technically, it is in a bear market, and this might be the continuation of that bear market for Intel. Looking at the hourly, you can see starting to break down and get that hourly close. 2 minutes away, and we're going to have that hourly close. So that's pretty bearish in general. And Qualcomm. So, took us a while for this to break down, but it was priced into the chart. You can see here on the daily, negative divergence, continued to extend and build. All this price action here was divergent high. So I entered the trade here on earnings when it gapped up. I got short right here with my initial starter position, added to the short there, and I added to the short right there. So yeah, it's a profitable trade as of now. Even on the initial starter position, it's profitable by about 2.5%. Now we're coming down to the support though. Here's your price channel right there, and we're coming down to to hit that support. So very likely we get a reaction there, and so I'll most likely be taking some profit right here, and then we'll see if we actually get a break of this price channel. But if we get the break of the price channel, I would expect we get a reaction right there at about 129.45, 130, somewhere right in there. We'll just mark it out right there at about 130. Okay, that's all I got for right now, guys. I'm just going to wrap it up. There's nothing nothing else is happening too much. The solar stocks are selling off a little bit as expected, so continuing to watch those. I think they got further to go to the downside, and I'll get this out to you guys. So thank you. Catch you on the next.